Welcome to the AGORACOM Online Investor Conference. My name is Al O'Grady, and I'm here to introduce to you our next keynote speaker, Mr. Peter Spina. Peter Spina's experience with the precious metals market started back in the mid-1990s, which led to the creation of GoldSeek.com in 1995. Today, GoldSeek.com ranks within the top 3 most visited gold-related websites in the world. Its sister site, SilverSeek.com, is the most visited silver website in the world. Now, when a secular bull market in precious metals was taking shape, Peter established the technically focused subscription newsletter Gold Seeker Report. Then, in early 2005, he merged it into the more comprehensive GoldForecaster.com service. In addition to the newsletter and websites, Peter frequently appears in the media, including Investors Business Daily, Wall Street Journal's Market Watch, Reuters, and TheStreet.com. Ladies and gentlemen, Mr. Peter Spina. Peter, welcome to the Online Investors Conference, and the floor is yours.
Thank you, Al, and AGORACOM for having me today present at your conference. Good afternoon, and thank you for joining me as well at this presentation. I'd like to speak about investing in gold and silver and the next phase of this gold bull market. A little about us and myself, as Al mentioned, the website was established back in 1995. GoldSeek.com today reaches over 250,000 people on a monthly basis. We are a leading source for precious metals information and financial truth, ranked as the largest silver website and second largest gold website in the world. I included a chart on the right-hand side of page views to GoldSeek.com to kind of give you an indication or show what is occurring right now. It's a good representation of the sentiment and psychology. We have seen about a 400% increase in the amount of page views since the summer alone. We're reaching nearly 18 million on a monthly basis. My background in the mining sector goes back to establishing GoldSeek in 95, as well as investing and focusing on working with selective junior resource companies to develop their investor outreach. I'd like to start off with some gold and silver market observations. The gold market is quickly changing. The dynamics are ever-changing. I'd like to reemphasize the point that this bull market is not about jewelry demand. Jewelry demand is a significant component of the gold market, but it is the investment demand which is driving the price and continues to move the price higher. This is about money. It's about a credit bubble, debt, and paper currencies. Gold is a safe haven asset. It is money. It has been money for over 5,000 years, and paper currencies have not had a strong tradition of maintaining their values or surviving. So gold has returned back to its historical attribute as money. The next phase of the gold bull market has begun. We can see that as represented in the price. Some of the dynamics which have changed in the market is we're seeing an increase in institutional buying. We're seeing central banks go from net sellers to net buyers. We're seeing sovereign wealth funds enter the market, more retail interest, and so on. So we're seeing a lot more demand coming from various sources globally. So why gold? Again, it has and continues to be money. Historically, it is an asset of trust, no counterparty risks. And in a situation here where there is so much money floating around the system, one who is looking for lower risk and safety is going to have trouble finding that in today's markets. We have extremely high valuations, price-to-earnings ratios in the markets. We have a treasury market which looks quite risky, which is also a future big potential demand for the gold price. And we're dealing with an artificially suppressed gold market, which has been managed by central banks for many years. I believe that this is an opportunity for investors, as the distortion in the free market price allows investors to still get into the gold market at a suppressed price. I would highly encourage those who are interested in the gold market to take a look at Gold Antitrust Action Committee. They have quite a bit of documentation and evidence regarding this matter. Their website is gata.org. I'd like to take a look at different ways to invest in the gold and silver markets. I believe there should be a proper allocation between bullion, which is physical gold and silver, and mining shares. I like to suggest that people or investors looking to get into physical bullion take a look at actually acquiring physical bullion and holding it themselves. There are some good storage programs. I do believe gold money is a good place to hold some gold and silver, but holding it yourself, where you take away the counterparty risk, is by far the safest and best way to do so. I would like to also mention that ETFs do pose a certain danger. Beware. For example, the gold ETF on the New York Stock Exchange does not allow you to take delivery of the gold. There is no security or guarantee that all the gold is there representing the shares. If you're looking to invest in gold, you're looking for a place of safety and low risk. So to do that, you take physical possession of the metal. Mining shares offer you leverage to the price. You're provided with hopefully higher risk reward for taking on additional risk. I currently focus on production and near-term production companies as well as exploration companies at this time. So when looking at gold and silver, one may want to consider a certain allocation of gold over silver, silver over gold. One item to consider is taking a look at the ratio of gold to silver. Historically, we have seen that ratio in the teens. Over the last 20 years or so, the ratio has ranged from the low 40s to as high as 100. What the ratio is, it tells you how many ounces of silver buys you 1 ounce of gold. During the late fall 2008 pullback, we did spike from the low to mid 40s to over 80. Currently, we're in the low to mid 60s. I believe silver is an excellent leveraged option right now over gold. It is higher. It is more volatile and poses higher risk, but I believe the returns in the silver market will exceed those of the gold market. Another consideration, another chart I'd like to have take a look at is gold stocks, the HUI index, which is a basket of gold mining companies versus the gold price. If you are taking on increased risk, you want increased reward, and that's what mining shares should provide you. There are certain risks that we should be aware of, including a general market collapse like we saw last fall, which saw the mining companies take an incredible hit. But the upside to that as well, as during this gold and silver bull market, the mining companies are lagging the metal itself. We did see a ratio as high as 0.64 back in the peak around 2004. Currently around 0.4 or so, the mining shares are undervalued in proportion to the metals. Obviously, there's other fundamental considerations to take a look at, but I believe if you were to take a look at some of the major mining companies, you'll see that there's tremendous value at these metal prices. The first company I'd like to take a look at, and my largest investment, is into Gold Resource Corporation. They are currently about to commence production any day in southern Mexico in the state of Oaxaca. Gold Resource Corporation is a low-cost gold producer which is set to produce 70,000 ounces at year one at a $100 an ounce cash cost. Year two, that rises to about 110,000 ounces gold equivalent. And in year 3 and onwards through year 9, they're expected to produce 180,000 to 200,000 ounce gold equivalent ounces per year at a zero cash cost, potentially at a negative cost as the base metals, high base metal content that they are finding with the gold and silver deposits are used to offset the production costs. They just recently updated their mineralized estimate to 2.4 million ounces gold equivalent. They believe that there should be no difficulty of achieving 3.5 million gold equivalent ounces in the near future. The exploration potential of the system remains quite large. Currently, only 2 of the 8-kilometer mineralized trend has been explored or is being explored. They have other properties as well, and I believe there's large exploration potential to this growing system. The share structure of the company is excellent. 46 million shares, 49.8 million fully diluted. Once production starts up, the goal of the company is to distribute 1/3 of their free cash flow in the form of a dividend payment. So what could that look like? Well, in year one, using current gold prices, we could see about $1.50 in free cash flow. In year 2, 3 and onwards, with current gold prices, that rises quite significantly above $4 a share. So we could be seeing $1 or more in dividend payments once production reaches 180,000 to 200,000 ounces a year. Account for much higher gold prices, and those numbers really get exciting. The valuation metrics that I use for operating mines, and obviously there's quite a bit of consideration to provide as well when looking at the size of the deposit, the grades and so on, which Goro has an elite deposit, very low production, high-grade material. But in its group here, operating producers, we're seeing about a 10 to 12 times operating cash flow multiple valuations being given. So you apply those numbers towards Agoro's potential operating cash flow coming in, you're looking at a stock price that could potentially be $15, $20, $25, $30, $40 a share once full production is met in year 2, 1, 2, 3, and 4, and onward. The largest shareholders in the company include management owned and run company, which is what I like to see as an investor. You have Tocqueville as a major shareholder, and Hochschild, which owns 24% of the company and has a standstill agreement with